Holy smokes. I think I made it on time. Just just barely. I literally was up on my roof cutting back some trees, cleaning some gutters. Don't buy a house, it sucks. I'm just kidding, but it kind of does. Oh. So hopefully I don't look too homeless. Oh, what's up, Tanner? What's up, Meat Fantastic? Oh, yeah, I was like gonna pull up some stuff, kind of get ready, get prepared a little bit, but nope. What's up, first, last? How you guys doing today? Thanks for taking some time out of your Saturday to stop by. Always more interesting with a few people here. See what we need to talk about today. I need to jump into my studio. Options guy too. Hey, after this, let's jump into a Zoom call. I keep thinking about it like all week. I might put you on a trimmer, but yeah, for sure after this, let's jump in a Zoom call or something. I need to grab. Yeah, it was funny. Like when we bought this place, my girlfriend was like, "Yeah, I'm gonna be outside all day. I'm gonna be trimming some stuff, gardening." She's been out here. She's been outside like once, maybe twice, I think, in the last 6 months. So I still need to buy some stuff like the bush trimmer thing, and I think, well, I gotta have a tree taken out, like one of those things for chopping branches up high. I can't, was it like a rope cutter? Can't remember. But yeah, I've been super busy, but I'm like actually pretty caught up. And then I think I'm caught up with everything. I actually took the yesterday afternoon off to get all caught up because I'm going out with some friends tonight, and then Sunday I think we're gonna go visit some breweries and stuff. There we go. Or hire someone. You're right. I go kind of back and forth in between that. It's like, oh, what am I doing? Wasting my time doing that. I could pay somebody. And I had a bunch of my fence built and a bunch of yard cleanup done, and I think it was pretty relatively cheap. But there's part of me, like when I'm actually doing it, it's kind of enjoyable, almost like a little bit of meditation, because you don't have to use a whole lot of brain cells or anything to actually be out and to like run a mower or cut some stuff or clean some gutters. It's kind of funny, relaxing. Although I'm sure there's something better I could do with my time. But this is a good break. At least it got me. I looked at my phone. I was like, oh crap, I got 10 minutes to jump off the roof, wipe my face off so I look non-homeless a little bit. All right. I have an Amazon 3100, 3900 put credit spread. Nice. Why is it hard? What do you mean it's hard closing? Oh, is it hard closing? No, Amazon's pretty liquid, and that's super far to the money. Because they're like, what, at 30, 33 some or something last time I looked? I mean, any of the big names are going to be pretty dang easy to close out. And they're 924s. Yeah, dude, those will be a piece of cake. Piece of cake to close. A 660, 655 too risky. I mean, it's risk to reward. They're always fair. I have a few 660s. I think I would consider those risky. Yeah, I mean, at this point, it's $40 out of the money, which isn't huge for Tesla. Personally, I'm feeling pretty confident right around the $700 level, but who knows what happens, Monday with some with some escalation with China or something that screws us up again, and I think I didn't look at it. How are the bonds doing? I know there was like a spike up, I think. Oh no, they've been pretty chill, huh? Little bit of raise there. I mean, that's gonna be a super good return though on that play, right? I think I actually probably have some 660s expiring on that date. Actually, let's just see. 820. Look at that. I do have some. And we're up $74 on those. So I do have some. That's actually not a huge credit. Not terrible, not super, not like set it and forget it. To me, like down at like 630, I think would be the set it and forget it. Not even worried. 660s, you know, who knows? I mean, what, we only have a couple weeks, but with Tesla, I mean, it can move. I get you. I tell my wife if I've made money on stocks this week, I get a call the long guy. But if you live in the South Texas and it's 105, yeah. My sister actually lives in Dallas Fort Worth area. I haven't been down there since she moved down there, except for like I've only been down there during a layover to Mexico before. But 105, man, and you guys have the humidity too, which just kicks your butt. That humidity is something else. We actually in Seattle, I'm sure it was a record. Like we hit 100 and something, and we're not built for that. We're just not built. Like 90 degrees is hot for us. So we don't have AC, and now everywhere around us, like ACs are all sold out. HVAC guys are booked out. Nobody can get air conditioning. Need some calls on the HVAC equipment guys for sure. And I don't even know, like in Texas, like everything's super expensive here in Seattle because we have Microsoft money, we have Google money, we have Amazon money, so everything gets super expensive. Living cost is ridiculous. So I feel like our lawn or yard guys cost more probably than some other parts of the country. But I don't know. It's still a lot. But anything to save you from the 105 degree weather for sure. You got two right after the dip, so you grab those Amazons right after the dip. Nice. Yeah, I still have that put credit spread at 3,400. So we'll see, and I think that expires August 20th as well, August 20th or 24th. So I'm just letting that thing ride out. Where's my Amazons? Yeah, I'm nice and down on that thing, but my feeling with that is that it'll kind of slowly recover. I mean, Amazon's been pretty strong overall. And then I went ahead and sold. I took that same collateral and sold the call spread on it, so I'm not down super as much as this shows. I mean, it shows I'm down 250, but I sold the other side for I think $100 and something, so not too bad. We'll see how that goes. All right, what's better? First of all, there's never a better. They're just different risk or reward. 7 to 9 DTE or 20 to 30 DTE. Okay, there is a better. 1TE, but it's been brutal. I want farther away from the price. Seriously, reducing my income. 20. So, like statistically, I believe it's like a 30 to 45 days. Like the more time that you have, the more time that you have to management. If you, and I would watch Tastyworks and Tom Sosnoff, who like they do all the back testing, but always it's a 45 days, like statistically. Where are we going Monday, Tuesday, and the rest of the week? I don't know. Did you know Thursday was like the lowest, like on Tesla, was the lowest volume trading on Tesla for like a year or something like that? Ridiculous. I'm still waiting for your 740. I'm excited. I got the thumbnail ready. Whoa, so Tesla hit 740. It's getting pretty close there. Yeah. Oh, yeah. Your ice storm down in Texas. That's crazy. Like, it's still affecting the supply chain so much. So I know, I don't know why it is, but a lot of the precursors for quite a few chemicals are made in Texas. So like polyurethane foam, polyaspartics, epoxies, what else? Like paint, I guess. So a ton of that is still just completely like back order, like everything's just back ordered with it. What's up, Jacob? Back from Greece, my man. What's crazy is I've met two other people that either going to Greece or came back. Super popular. How long have I been trading stocks? Like, I've been trading options for just since the beginning of the pandemic. Well, actually, no. Well, I mean, yeah, I guess it was just before, about 6 months before the beginning of the pandemic. Stocks I've had for a while, but I didn't like day trade or anything like that. Or, I mean, it's kind of like, I think everybody with I got really interested in it prior to the pandemic, which thankfully that allowed me to get that big gain initially. So I don't know if you've heard that, but like I started my account, this Robinhood account, with $575. And I made my initial like $50,000 like right at the beginning of the pandemic, when I heard about the virus. Like, I just thought through what could have potentially happened before there was any of the downside movement. And I was like, man, I know there's a way if the economy like absolutely drops to profit off of it. So that's what got me like super into it. And I was like, how is this going to be? How is it? And found options and bought some calls and some puts on the right stuff. So that's what, like, it was like, I don't know, a course of a week or something like that. I turned that $500 into 50 grand and then just kind of kept going from there. Made a lot of mistakes, still learning a lot too. You've been liking 45. I think 45 is great. If I wasn't, I mean, I've definitely been a lot more greedy lately, and I think it's because of some of the dips, but I really like 45. 45 has always looked fantastic because the underlying can move severely against you for 2 weeks, and you still have so much extrinsic value that you can still roll things out and take a credit. That's what absolutely saved my butt. Like on the where like December's, where's those 35 of them? I'm sure I've pulled this up during some video. What is this? This must be like, so like I have 35 of these, right? I'm pretty much, right now I'm break even. I think I was up $1,500 on them, but I was able to roll these out back when Tesla had hit like 880 and then dropped way down to 650. I was able to roll them out. And since I had 2, 3, 4 weeks on them still, I was able to do that and preserve all this capital. If I would have opened these up like 2 weeks till expiration, this is $35,000 worth of collateral on, isn't it? Is this the one? Nope, sorry, I'm wrong. Where's my, I don't want to lie. There's really no point in that anyways. Actually, even these though. Where does it show it? My gosh. Like, I have 19 of these, and I mean, that's, what is that, $20,000 worth of collateral or so on these. And then same thing, I have some 700 695s and stuff like that where I was able to roll them out, and the only reason I was able to do it was because there was so much extrinsic value left, because I was opening them up 45 days out, like 4 to 6 weeks out, on every single one that I had made. And then as Tesla was dropping, like outside of my comfort zone relative to where my strike prices were, I just rolled them out, and I would roll them out 3 months, 6 months, didn't really matter, because instead of taking a $20,000 loss on my collateral and having the full faith that by the end of the year Tesla was going to be $700 again, I could roll those out very comfortably. So that absolutely saved my butt. We should go back to March and just spot leaps on the SPY or GME. No kidding. Yeah, if we could only go back, why not just go back, like, 3 years and buy some Bitcoin, go buy some Dogecoin for 0.0001 cents or whatever. Like, there's so many different things. If we could go back, I think the point is, like, the biggest lesson I think I got during that big drop, because I remember Carnival Cruise Lines, I bought those puts like super early. Boeing, I bought those super early. Like, I bought a lot of them very early, but there was no rhyme or reason or anything to where I was buying them. I think I was all buying them like week expiration and just making a lot of returns like that, and then the bonds. But now, and then going back, the biggest thing that I had learned is that sharp recovery. So even though it was scary on the way down, even if you had bought things at that peak right before everything dropped, I mean, here we are a year later, or what? Well, now we're, a year and I can't believe it's been a year and a half. That's insane. But even a year later or 6 months later, everything was at or above where it's at. It's just crazy. So that always gives me more confidence in overreactions that I see in stocks. Pandemic got me involved with the stock market also. Yeah, because we had nothing else to do. Like, couldn't go out, you couldn't play, you couldn't shop, you couldn't travel, you couldn't do anything, which sucks. And then with Robinhood, and there are no fees, and how easy it is to use, you almost couldn't help but not. And I think it was just a popular thing. What's up? You closed the week up $26. Nice, Abby. Or Abby, I don't know. We'll take $26 better than being down $26. How's our little Iron Condor doing? I think, did you open that one up? I didn't even, God, was that a 627? Is that when we opened it up? I need to change that. Oh, $27. Look at that. Oh, that was yesterday's return or whatever. So we're up $50 on our Iron Condor. Nice. I switch from strangles or naked condors, and notice theta doesn't help near as much in your experience. At what point does it kick in on the spread? Like most of the theta decay will happen in the last 2 weeks, and no problem. More questions, the better. Like when I started doing these live streams, I mean, like, I think my first one I might have done by myself, just reading through old questions, and then like a couple people, and now this is about right, like 10, 15, 20 people. We can kind of BS back and forth. It's not too crazy, but it makes it interesting for me. I started all this just because I wanted somebody to share it with. Like, hey, I'm learning a lot. I know I still have a lot to go, but I wanted to share what I've learned. And my coworkers weren't interested, and most of my friends weren't. So I guess they kind of missed out. Now I've got a couple that are like, can you just can you just play with my money for me? No, that's too much stress. Is a 16 delta good for a 30 days till expiration? Depends on what the underlying is. I mean, it's all that delta is. That's risk to reward, and you can also kind of use that delta as a proxy for how likely it is to be in the money, like a safe play. So like a 16 delta has an 84% probability of staying within the money, even though the actual meaning of delta is that it moves like that much 16% of the stock relative to the price. When I do 45 days out, I'm up almost 100% in 20 days, especially if the stock moves in my favor. Yeah, well, if it moves in your favor, of course. Yeah, and that's always the best. Hopefully you're getting out of those too. That's like one thing I need to look through mine, especially in my other accounts, because I don't look at them nearly as often. I'll look at my Robinhood several times a day because it's just so easy. But my TD and my Tastyworks, I don't look at it very much, and that's one of the I mean, it's not a huge mistake, but I don't close a lot of my spreads when I'm up like 98% and they're just sitting there for no real reason, when I should roll them out or up or something, or do something else, or just get out of them, most importantly, and just have no more risk there. So everything most of them I'm up. Let's see. But in my winning position weeks before expiration, that's why I like longer DTE. It's not going my way. My favor, I have more time to manage and roll. Yeah, 45 days is just smart. And over the long term, that's probability wise, it's the correct amount too. What are the best underlyings for a small account? For what? I mean, the nice thing about, and it also so it depends like what strategies you want to play. But and by small account, that could be all relative, right? It could be $100. I started my Tastyworks one with, well, I guess I started my Robinhood with $575, and I started my Robinhood one, or my Tastyworks one, with $700 originally. And I was able to 10x that in pretty short period of time. But I mean, really, even if you have $100 in there, that's enough to do credit spreads on something that at least has, dollar increment strike prices, and just you could play the SPY, broken wing butterflies. Those are pretty easy. Or if you want the high risk to high reward, do some butterflies, some actual iron butterflies. How do we protect our put credit spreads? So you would just buy additional puts to even out the overall delta. We appreciate your help. I'm excited to make money with put credit spreads. Yeah, I'm excited to make money, period. It's fun. I'm not sure how long you've been into it, but it's just, I think it's pretty neat. The best thing I think about options is there's an option for any situation. Like, no matter what's happening, you think it's going to go up, you think it's going to go down, you think it's going to stay the same, you think it's going to end up in a little pocket, you want a high risk, you want low risk. Like, there's something for everybody there. And then you could also, like, you could do something like, if you think it's going to be a big crash, you could just purchase shares of some UVXY. You could buy some far out of the money, like short-term, far out of the money puts on different underlyings or calls, like on UVXY. Usually a crash is going to go in tandem as the indexes go down. UVXY, which is the volatility index, is going to go up, and that's a leveraged that one's leverage. So, or like bonds, which is, that's what I made. Bonds are what I made a lot on, because when all the big money got scared, it rotated into bonds, and they just basically almost hadn't moved at all. So just in case you don't know about UVXY, I mean, you can see, oh boy, let's look at that 5-year. So I mean, like, generally they're pretty down, but this is like where we had, I mean, look at that spike from 76 to 866, and then let's see, so this was March during that last one, 106 up to 911. So like that's a 900%. So if you were to buy something like super far out of the money as far as a call on UVXY, it's going to be pretty cheap protection, and if volatility happens, that's a pretty decent way. Do you have your bigger accounts with Tastyworks and Thinkorswim? Yes. No, well, my biggest one is with Thinkorswim, TD Ameritrade. My Tastyworks isn't huge. That one I wanted to, like, I got successful as far as from just an account growth standpoint, and I was like, this can't be right. It can't be this easy. Can I do it again? And then so I started all over, and all I've done in there is Tesla put credit spreads, but they've been very far out of the money, very, very, very conservative, and just kind of did the same thing all over again. But my main Thinkorswim, and M1 Finance too. M1 Finance has like my IRA in it, and that's where I make a lot of my long-term purchases too. If there's one strategy you could do for the rest of your trading days, what would strategy be? I would like to say put credit spreads, but I might say it would be between, God, if I could only pick one, probably put credit spreads or broken wing butterflies. I really like those two. If I just had to like do an income generation kind of situation, or yeah, one of those two. But that's not how they made strategies, or that's not how they made the options market. So right now I'm doing a Tesla Iron Condor 30 DTE 2K account, but thinking of 45 for more premium. Cool. The only thing I worry about on Tesla, and I'll say it over and over, and it's probably one of my biggest my weaknesses as far as it comes to Tesla, is I am scared of the upside of Tesla. I am scared that they are gonna say, all right, like Cybertruck's done and it's rolling out, and then all of a sudden it's $1,000. That's the only thing that scares me. That's the only reason I'll only sell like those calls like $800 or $900 out, and I'll only do them for like a week or two maximum. I feel like the longer I put for the expiration of the put credit spread, the less likely I can predict the direction the underlying can go. If the one DTE is if the DTE is 1 week, I feel confident and won't tank right away. Yeah, so you're right on that. So because there is the expected move, and generally you're going to be right. The part that bites you in the butt is when it does move unexpectedly, then the value is so little, there's no extrinsic value, so you go down to a $0 extrinsic value, so it becomes worthless very fast. But if the underlying was to go down that same amount and you had it farther out, then there's still extrinsic value. So so you do have kind of a backstop. You're able to roll it out or manage it however you want. You could even close it out for some cost. But if you're doing it 1 week out and it happens to have a drop, and every single, like, nothing's immune to it, or a big spike, on the call credit spread side, then you have no recourse. You don't have an out at that point. I notice you don't leave much unused cash in your large account. What do you do if you need to roll for a debit or don't want to close the untested side? Great question. Usually I do have something else I can close. So if I did need to, I could always roll some stuff up. There's a few things that I just have kind of like as a piggy bank savings account, which would be like QILD. Like I don't need those, but I hold QILD because I have a 10% dividend a year, so that's just kind of some constant income. AT&T, I don't care if I get rid of at this point, since they're going to be cutting their dividend. I mean, I love holding on to some of those as kind of a staple. So if I did need cash, I mean, I also could deposit cash into the account. I've taken $55,000 or something like that out of the account total. But if I did need to, that's what I would do, or just liquidate something. I'll take an inventory like once in a while. I'll go through things and I'm like, why did I buy that? Or I can close out. I have debit spreads too, so there's cash there. I can close those out, or I could even pay to close out some longer term credit spreads. Get the collateral back. Use that, or like I did on Snap, that leaps that I turned into a debit spread. I can close that out and still take all that profit. That profit's still there. But really good question. Can you show us how to do a broken wing? Yeah. And I did one live, I think, was it Thursday or Friday? I walked through it doing it on the SPY. But what I really like, so I still love the options. What is it? Options strat. Love using this for the broken wing. Actually, I love it. I love using this for any strategy. It's a very nice visualization. If you don't know how to open something, or you don't know exactly what the profile is going to look like, this is a great visualization. So like the ones, let's see, 8. When did we do these? We did them for, oh, no wonder they're on Tesla. So I did these on the SPY, and I can show you the one that we opened. Oh, the problem, these won't, do they show Delta on here? They do. So I can show you the ones that I've been opening for income. Basically, we've been selling at a point, or a 10 delta, or 0.1, 0.18, and these are very, very low risk, but very low reward. 0.13, I know I've been. 0.12, is it gonna even show right? Okay, there we go. And is it even gonna show? That's a terrible graph. Oh, how do I change this axis? Chart range. There we go. But basically, so on the and I can show you what I do on here too. Broken wing butterfly. So same kind of thing on here. We'll go to options. So what I do on the ones that I open on the SPY is I go to a put and open them about 10 days out is what I've been doing. So I look for the 0.1 delta or 10 delta, and oops, nope, click here to find the delta. Which delta do we just see? 12. All right, so there's a 0.102 you can see down here. So I go ahead and I sell 2 of these, I buy back the one above it. And this is going to be like a $300 collateral for about $10 worth of income. And then what I do here is I'll take on my gigantic calculator, see which one we need to sell. So we have about $10 worth of credit. Just take this 71 cents, multiply that by 2 because we're going to sell 2 of those. We're buying back a 77, so we subtract out 77 cents. That leaves 65. So I find something that's going to leave about 10 cents from that. So 10 cents less than that, it's going to be about 55, or probably this 53. So we buy back the 421. Then we have to go to edit the ratios. Where is it? Custom, unique ratio. And we're going to sell. There we go. And this is our broken wing butterfly. I guess same kind of thing it shows over here, but there we go. I actually like this graph a little bit better. But basically we have our full profit, which is not very much, like in this case $18, and it's anywhere from the S&P dropping down to 411 or anything positive, it's going to be up. There's a little built-in lotto ticket on these guys, so you can see right at, if it happened to close at 410, we would make $115 on this play, and we would lose it all. Well, you'd be down pretty much after that, break even at 408, and then potentially lose it all if it dropped down to 402. But very high probability of profit on these guys. And pretty simple to set up. Very simple. But I did on Thursday, I can't remember, Thursday or Friday, I walked through it and I opened it up on the mobile app on Robinhood. Bro, do you have any beta weight neutral your portfolio? I hedge or put credit spreads with some call credit spreads, or have you looked into it yet? I've seen some tasty vids talking about it. I haven't even had the chance to watch any of their videos lately, which I should, because the majority of the watching I did was probably a year ago, where a good portion of what they were saying, and every good portion of what they were saying was going right over my head when I started watching them. I remember finding them in the first place. I'm like, cool, I'm gonna learn about options, gonna watch Tasty Works, and very, very little made sense, even what like Tom was saying. And then I'd jump over to Investopedia and try to wrap my mind around it. Now I should go back and watch it more. I watched an interview he did recently, and there's so many little gems that'll come out of his mouth, and they're all just facts, and they're back tested, and they're just solid things, which is super awesome. But I have not. I'll do the call credit spreads. Yeah, I mean, just in the form of iron condors, or open them up to take some additional premium on collateral though once in a while. Biggest questions. What would you recommend as a job replacement strategy, aka steady and consistent? Probably that. Broken wing butterflies. I mean, broken wing butterflies, or depends like how much collateral, how big of an account do you have? I mean, you need $500,000, buy QILD, as long as your stuff's paid off, or depending on where you live too. You can, it's 10% a year, $400,000, $500,000, you get that much in just dividends. It's nuts. 10% a year. I mean, $2 million, it's crazy. Like, literally, if you have $1 million, you can collect $1 million worth of dividends, $100,000 worth of dividends a year. But anything short of that, I think you have to have something. For job replacement, you need a lot of experience. You need to go through some losses, develop your strategy. I don't think there's like like a short answer to that. I mean, it could be day trading, you know, if you really want to bear down, but expect to take a year to break even, to study, to learn it, and you know, hopefully break even and maybe some losses and be okay with it. Let's see. How far down and how close to in the money do you let your put spreads get before you roll them? Depends on what they are. It really, there's not a good answer to that at all. Like if we're nearing a low that's been, like, it's been bounced off and a support time after time, I'm just probably not going to roll them. If we have an overall market is just pissed and everything's going down, then I'll look at doing it. But every single situation is different, and usually like that's why I do a lot of them live or talk about it, just to see what you guys, so you guys can see what I'm thinking at a given point. It was like before the earnings where I closed out a lot of my positions, and all those positions I closed out or rolled down or rolled out, they all would have been winners. But my thought at that point was, okay, in the past we've seen the earnings come out and Tesla drops, so I just don't want the risk or headache. But at any other point, I would have kept them. Usually close at 50% profit or 21 DT, or wait till expiration. They all depends. On put credit spreads, a lot of them I will put an order in for 75% profit on my Tastyworks account. But also depends. Like, did I have some, you know, like on Tesla, did I have some 500 strikes and Tesla's up at 730? I'm probably just gonna, depending on how far they are, I'm probably just gonna let them expire, just to keep some kind of free money coming in. Hey Princess, hey, did you roll out your Roku? I can't remember when you have that thing expiring. It's so funny when I see your name, Princess. I actually have a friend named Princess. Like, that's her actual real name. I think about her every time. A broken wing is good for a small account. Thanks for teaching me. Can't wait to see you try to sell 2 and buy 1 above and below. So you sell 2, buy 1 above and 1 below. Yeah, you sell 2, buy 1 right above, and then you sell 1 down far enough to where you can still collect like about a 3 or 4 or 5% credit. There's not, I always buy the strike right above it, and then where the one that's below it, you just go down far enough so you're still collecting some money. Can we please analyze Tesla? In which way? I don't, we can take a look at it, see if there's something to see, but right now I'm thinking the, you know what I hate is when you get even though you get a wash in your Robinhood account, now it shows my average cost is way up because I had that butterfly expire in the money, that $130,000 margin call I showed. But now it shows my average cost is way up there when in reality my average cost is like $200, something like that. Let's wait see if this will populate. There it is. Look at our 1 year. Oh, police. Definitely way different than the, oh man. A lot of police or fire trucks or something. I don't know what's going to do the coming weeks. I saw our 700 get tested 3 times. I see a breakout. I think the 700 is going to become the new support, or right around there. Obviously, it's a little bit down. What are we? 697. I think next week will be up. That is my opinion, and I can't draw on this. I want to draw some wedges here. I'll I'll grab Thinkorswim. I think I still have some stuff drawn on there where I think where we broke out. Let me see. I need to grab. Where is it? There's my Thinkorswim. Yes, I sure do want to open that. All right. 30K is a ways off. I went from 16K to 80K in 3 weeks on 1DT, then back to 15. Wow, what killed you, dude? Wow. That's crazy. You know what was really crazy? I noticed, because I wanted to learn a little bit about those. I started watching a bit of the zero DTE people that were they were tracking it, did really good research, and there's a lady that just posted that's all she does. She quit her job and she just does zero DTE on the SPX. That's all she does. But I noticed there was all these people making these videos, and then all of a sudden they were gone. So I wonder if kind of what you had experienced. I mean, not gone, but they just weren't posting so much. I wonder if it moved against a lot of people during that same time period that it happened to you. But the biggest thing, I don't know, what did you learn from doing that, by the way? Me, fantastic. Is there something you think you could have done better after looking back at it? And do you think you could continue and be more successful on it? I mean, that's part of the real work of trading, logging everything, figuring out why you did what you did, documenting it, and then using that data to do better. How do you even really day trade? Is it just buying a call or selling the same day? Yeah, there's people that so they'll day trade options and they'll day trade actual stocks. So they trade on, most of them will trade on a ton of margin, but they'll purchase 300, 500, 250, 1,000 shares and try to get a 50-cent move or something like that. Very, very little move on the underlying, and then just sell it. Or short it, which is basically borrowing the stock, hoping it goes down so you can buy it back for cheaper, and then you return it to the owner, which is all part of a short squeeze. Was basically happened for a longer term thing. But if you're curious, check out Humble Trader or Humbled Trader. She does that for a living. And I love listening to her, but it's to predict what's going to happen next, during a day. A lot of the times they're in and out of trades in minutes. That's just a lot of practice, a lot of discipline, a lot of very good capital management, and probably resilience. Most everybody that I've ever seen that has some longevity to their day trading career, they all talk about the first year or two. The first year they lost money, second year they broke even, and it wasn't until their third or fourth year to where they actually did okay. But once they do that, then that's their career. They literally just sit and day trade for the day, and she's done it at the end of the day and go. She's her exercise is a pole dancer. She eats ramen and does some pole dancing. I wonder if you guys can hear the sirens in the back. There's nothing terrible going on. All right, I want to try to find when a meme stock goes up 100% in one day, and then I can play a straddle and see how that goes. I know, but there's still the day you play a straddle is the day it'll just move sideways, of course. Do I trade using margin? Yes, I do. Yes, I do on my Robinhood account. But keep in mind, so I'll just preface that by saying that is not my only account. That is not my main holdings. That is not all of my money
in there at all, and most of my margin is used for options collateral, not buying underlyings or anything like that. I have used, actually on M1, I do use their margin to purchase, to buy into my dividend account, because my dividends returns are about 7 to 10% a year, and the cost of the margin on M1 is about 2%. So for me, that's kind of a no-lose situation, especially when we have a down day and I can stick some more money in there. See, is a broken wing butterfly basically a high probability put credit spread with a lotto? I mean, it's a kind of a put credit spread and a debit spread with one side larger, but I guess if you kind of want to, yes, yeah, as far as the risk profile, yeah, you're right, it is. A broken wing butterfly is basically a high probability credit spread with a lotto, yes, as far as that risk profile. Except for with a put credit spread, I'm pretty sure at those same strikes that you would have, you would get more premium on it, I'm pretty sure. May June 16th had 12 winners in a row. Oh, this is going back to the one DTs. And June 18th, I couldn't roll for less than a huge debit and just closed. Gotcha. And then that just like wiped out everything. That sucks. Best tips and tricks for put credit spreads. No tricks. If there's a certain underlying you want to play, and if you have patience, hopefully you do, wait for the big dip. Like, wait for the velocity. So if you're looking at opening up a put credit spread, wait for that stock to be just plummeting, and that's when you open it up. You're gonna get more premium than you get otherwise, and likely something like that, unless you see some fundamental change in the business or the entire economy. Most likely it's an overreaction. So anytime you can take advantage of the dip, like even looking at the SPY, every single time you see a huge dip, I can't say never, but you usually see a pretty quick recovery to the upside, unless it's something major like the pandemic, which obviously held for several months. But even that, at that high point, and if you saw that dip, sold it, and had to roll it out a little bit, eventually you'd be back up. And if you're new to them, do yourself a favor when you open them, put in a closing order for where you want to take profit, just so you don't miss it. That would be something I should do more on a lot of mine, where a put credit spread only has $5 left in it and it still has a week, and then the stock moves against me. I wish I would have gone back and closed it. What's the best stock to play spreads on, in your opinion? Put credit spreads? I mean, my favorite, you guys know, is Tesla. It's just my favorite. Best is probably the indexes for consistency. Should have gone to SPX from SPY. Yeah, I mean, at least it's cash settled. Okay, I've learned not to use more than half my account, because I had to close the winning side that wasn't 100% yet, so I could afford to roll the losing side. Also fees on TDs, and had to pay. Jeez, that's a lot of fees. Yeah, TDs fees. It's so weird, like when you you mess around with Robinhood, you get used to the no fees, and then you go over there. That's the one thing I know day traders can get killed by, are the fees, but they have less slippage. So it's either we play most likely a wider spread on the bid ask, or we pay fees. I think one's just upfront. Wait, simple option trader does these. I don't know if you agree. Wait, what did I miss? Oh, also holding overnight 1 TD is scary. I don't I mean, I don't usually do those. I don't have an opinion on those. I mean, everything's gonna have its own risk and reward. I know I say it over and over again on that. The more risk, the more reward. Less risk, less reward. But since I don't play those, because I think those you need to be able to monitor, like from my understanding, especially if you're playing like the 1 DTEs. I think you really need to be just in front of it to be able to react and balance out your trade. What do I think about having your whole portfolio split 50-50 QQQ leaps and 50% SPY leaps? I know it's a funny question. It's probably, I think we talked about this last week. I think it's good. I don't think that's bad at all. I mean, statistically they do well. You'd probably beat most, I'll bet you'd beat most hedge funds at that point. How do you find time to trade in a 9 to 5? My 9 to 5 is very flexible. I do outside sales. My actual time that I spend with people throughout the entire day probably amounts to 2.5 hours, and then the rest of it is phone calls, computer, stuff like that. So it gives me a lot of free time, which I think is why I'm more into it, because I can sit there, I can listen to financial news at the same time. That's when I make the videos, and that's why sometimes when I do actually have a real busy day and I'm getting caught up with stuff, like, it's only been a few times, but I haven't been able to put one out, or I'll literally try like 7 times, and I'll start recording, and then somebody will call or send me some message that I don't really want to put out there. But and then if I had a regular 9 to 5, like, go in and you're not allowed to use your phone, not allowed to pay attention to other stuff, I know I wouldn't do exactly what I'm doing. But it's also been why I've always, like, since I've ever worked, I've always had this kind of a job. Like, I worked for my dad as a kid, and then after that everything has been like commission based, or some sort of management where I have a lot of free time. That's all I've ever done. You can't put a closing order on Robinhood through your put credit spreads. Yeah, you can. You can put a closing order in. You just cannot do let's see. You can do a closing order. There's a so, like, you can only do it to the, like, the winning side. I guess that's how I want to say it. You can only do it to the one side. You can't do a stop loss, but you can do a closing order. So yeah. So if you open it up, grab $100 credit, you can right away do a good till close at $25. You can do that, but you couldn't do, like, if you wanted to close it out if it ever reached $200. So as a stop loss, you can't do that. What was that stock with that dividend? Oh yeah, QYLD. It's a fund that sells calls against the I believe it's QYLD sells covered calls against the NASDAQ 100. Oh wait, how do we get out of this thing? Crap. It's, yeah, covered call ETF, NASDAQ 100 covered call ETF. That's all they do. So they sell covered, they buy it, sell the covered calls. If it goes against them, if it gets called away, they purchase them back, sell out the money calls. That's all they do. On average, they, let's see, does it show, where's their dividend? I don't even know. I hate the fact that I use desktop only when we're here. But where's the dividend amount? It's like 10% a year though. But anyways, QILD, 10% a year. That's pretty much what you're gonna get out of it. So can we see what my dividend? Oh, this must have been my last dividend, because I have drip turned on, which is dividend reinvestment. So I received a dividend on July 27th of $74.80 for holding $7,800 worth of this stock, and that gets paid out every single month, which is pretty cool. So even at that, what is that? That's 74 times 12 would be, that's over 10%. But if you just count it as 10%, it'd be kind of good to go. And I've always wanted to dive into whether or not could we do that outside of the fund and basically make the same amount of money. Seems like if they can do it, we could do it. My dad was an outside salesman. He said he'd get paid to take people out to lunch and loved it. Yeah, I used to do that. So this is another company I used to work for. My manager our sales manager would be unhappy unless you spent like enough money. So it was insane. Like we had, and it was so these were like, this was a while ago when new construction was going just like insane, and there was these builders and their accounts were worth just tons of money, and they'd be like, yeah, take me to this place, and literally like we would start at 2:30 p.m., drink until 1, and have this huge bill, and and the company paid for all of it, and I got paid, and it was crazy. Sales can be super fun. And then the housing market crash happened, everything got tightened up, and now I don't do the lunch stuff so much. I believe it is covered call stock, QLD, yes, or a stock covered call ETF, yeah. What kind of outside sales? Insulation, so weatherization of residential homes. I'm majoring in finance in college, but I find sales jobs interesting. How did you get into that career, get started? I actually started doing the work, like piecework. So when we had my whole career history, it's very short. What did I do? I did one thing. So I worked at my dad's Harley place. And so everybody like kind of that rode Harleys, he was good friends with that community, and everybody was my uncle, and we're all friends. And then I think at one point my dad was on vacation. I was watching the place. I was probably, I don't know, just 16 or 17 or 8. I don't know how old I was. A guy came in to cash his check, and my dad would cash people's checks for him. I cashed his check, and it was huge. I was like, oh man, what do you do? So he did some of this demolition work, and I was like, oh, cool. He's like, yeah, you just have to take this class and go do it. So I did that for a little bit. I didn't like it. Started actually, I wanted to do something where I didn't have to rely on other people. I knew I didn't want to be in office. I actually did the installation for a while. So I did that for a few years. Looked around. I saw some people that should have been retired, like 60 some, still doing the work. I'm like, oh hell no, that's not going to be me in 40 years or whatever. And then so I was like, well, I can get into the estimating side, and then started doing that. Loved it. So I've done that ever since. So I did that for like a long time. I took a small break during the housing crash, and I did industrial coatings, did it all across the country, saw super cool things. It was really fun. And then I came back to installation just so I could be around home. I didn't want to be outside of my state or just away from home every day. I mean, flying and traveling is cool to a point. You see that when you start seeing the same things over and over again, you get like a little bit homesick after a while. So, and then so I still do it now, and I love it. It doesn't take very much brain power because I've been doing it for so long, and I just genuinely enjoy meeting the people. It gets me out. When COVID hit and I was stuck in front of the computer, which was good. Got to learn all the trading stuff, but still just miss talking to people most of all. So I'll probably keep doing it for a while, whether I need to or not. And I don't know. Depends like just how much QYLD I build up, I suppose. Oh man, missed that. What expiration links dates do you recommend for credit spreads? Ideal is going to be 30 to 45 days out, like 4 to 6 weeks. That's ideal, so you still have the extrinsic value to be able to manage them, roll them out, close them, whatever you need to do. Is it possible to set a target price in Robinhood? What do you mean by a target price? So you can put in a closing order on. You can always put a closing order on any like an options play that you have open. You can't put a stop loss, and then if you're talking about stock or the underlying, they have all kinds of options. So you can do like a trailing stop loss, you can do a stop loss, you can do all kinds of things there. Actually, it's pretty decent. So like setting a trailing stop loss, I thought that was really nice for something that's rocketing up, and then and which I've done on when I've bought something to hold for the next, like I only want to hold it for the next 30 minutes or so, I'll do a trailing stop loss in Robinhood, so I can go, if I'm doing my work, I don't get screwed when it has a reversal. Okay, so on QLD, do you really believe in the compounding interest at 10 years you can be a millionaire? You just have to do the math. It's basically, and the math is actually pretty simple on that. You can use an interest or like a calculator. I don't know if you've ever heard the rule of 72. You take any interest rate, you divide 72 by that number, and that's how many years it takes to double. So QYLD, 10% a year, you divide 72 by 10%, and it would take 7.2 years approximately to double. So that, $100,000 is only going to turn into $200,000 in 7 years. I say only, but compare that to a savings account with 0.01% interest, or something else. I think QYLD, I keep it in some of this in Robinhood just because it can sit there, and I have some of it in my dividend account. But the S&P, the SPY, because it grows better than QYLD is going to, like just holding shares of SPY is going to be better, more likely, in 10 years than QYLD is. QYLD is basically like an income fund. So like if you're retired, you're not making any more money, you're needing it, sure, then put your $1 million in there and collect your 10 grand a month. Okay, last question. My wife is on me to go to the store. Haven't you heard of Amazon Prime, man? If you plan on closing 45 at 20, could you pick your strike based upon the 20 and not the 45, or how do you pick your strikes? I don't understand. If you plan on closing, Oh, okay. If you plan on closing like something that's 45 DTE, when it's 20 days out, could you pick your strike based on the 20? Or how do you pick your strikes? I see. I think you'd still pick the same strike, because if your thought, because if you're, it depends like what your thought process for the underlying is though. I don't think it's specific enough for me to give you a specific answer, really. But I think you would still do it because you'd still want that. The reason you'd pick it on the 45. All right, there's the answer. You'd pick it on the 45 because the reason that you open it at 45 and you wait till the 20 to deal with it is because you'd still have the extrinsic value. So if it happens to move crazy against you, then that's your cushion. That 20 days of extrinsic value, that's your cushion. And one like, no, dude, I see 12 legs somehow. Oh, 11. Yeah. Thanking me, fantastic. I was like, one? Holy crap. Let's see. Do you ever buy puts? Yeah. I bought, that's how I made, that's how I like 100x or whatever that is, 1000x or something. My account initially was just puts, just SPY puts, credit, CCL, Carnival Cruise Line, and some TLC calls. So I do. I don't know if I own any puts right now. I don't think I do. I'm not. There's like nothing bearish on. I mean, besides Neo. Neo. But if I was just, that's the thing. I'm just not bearish on anything. Let's see. How is Neo doing anyways? They're still 43. Okay. Oh man, Bleakson, did I miss you? I'm sorry. Okay, let me find you. Oh, okay. I did answer that one. Do you beta weight neutral your portfolio? No. I have hedged with some call credit spreads. Yes. Yeah, I did talk about that. And I'm interested in, yeah, I talked about that because I want to watch some of the tasting videos on it. Oh, speaking of back tested, Tastyworks has free back testing software available to their customers. I haven't seen that. It's in beta testing right now, and you can get on the waiting list, watch a vid. Man, how did I miss that? I saw the oh dude, but I think my eyes went somewhere else. But that's awesome. Backtesting is going to be huge. I can't wait to use it. That's gonna be the best. All right. hopefully those. Backtesting is so awesome. I mean, because there's like a million things. There's a million different ideas I have all the time, and I'm like, I just wonder if that's would consistently work. And depending on, with the back testing, it's always difficult. I don't know how many variables they have, and a lot of it's been either paid for or proprietary software, so you wouldn't necessarily be able to use it. But I'm wondering if you put in a like one I would try is just like on the SPY, you have X% drop, sell a put credit spread 30 days out, like stuff like that. But that's super cool. That's like pretty big news. I'm surprised I haven't heard or seen that at all. But I guess Tastyworks is a little bit of the outlier too, right? Because Tastyworks is definitely not as user friendly as Robinhood, and I'm guessing the majority of people use Robinhood. I like it. Like, I use Tastyworks mobile. It's getting better. I know Tom said they have a new version coming out, which hopefully is even easier. But for a while there, it was so quirky. Like, I thought I put in a trade and and then whatever got executed was something completely different. So I think their platforms are getting better. Actually, I need to open up my girlfriend one because she wants to do her IRA in it. She's been bugging me the last couple days, but won't stop working. All right, let me not miss stuff. All right. Thinking about becoming a life insurance agent. I think I had a very good friend who wanted to do that. I believe that is just I think it's like a good, a great thing. Actually, I know a guy that, I do know a guy, he's retiring from it. He owns his own place. I think it's just like a long grind. I think it's like anything though. You put enough effort into it, you build your business, and you do well. It's like, even, I mean, I'm sure you guys seen some of the Amazon FBA courses and all that stuff, right? So I do that. I have one of those businesses also, that I've been doing for 3 or 4 years. And at the beginning, it was a crap load of work. Thankfully now, most of it, other people do most of the work for me. But it just like, it's not easy. It's definitely not easy. But I think the insurance, like long term, I think you do pretty well. And I also think there's a high turnover because, kind of like trading, like if you don't do really well in the beginning, you probably get frustrated and go away. So do you plan on trading full time? I don't know. I mean, I'd kind of like to. I've honestly asked my own self that question, and I don't know the answer. I really don't know. It's the reason I like my job is because I get out of the house and go talk to people all day. I mean, this is some form of that for me. Maybe if I did Zoom calls or something all day, I'd still want that interaction. And then it's like, oh, then I have all this more free time. Can I travel and do it? But then you're missing out on traveling to trade. I don't know. Do you want to? And then I would need to meet certain criteria, which is for me, that's house paid off, car paid off, and then X amount put away, to where I could consider doing that. So speculate the underlying will shoot up, and I decide to buy a call and want to exit as soon as it reaches my targeted price. How could I set it up so it executes? On a single option, you can do it. So if you're just buying a call, oh wait, I think I do own a call. I own some Ford calls. If we can get back to it. Some Apple calls. Where's my apples? Some Apple. This might take me a moment because I typically use the mobile app. Sell to close. Let's see. We'll go down order. So yeah, just right here. You can either limit order, where you'll say, okay, once this reaches $25, and then you can just put the expiration, good till canceled, and then that's it. And it says I don't have enough shares because I sold a call against it. But that's all you have to do for a simple call. And then you can also have, you can also do a stop limit. So basically, if it goes down, if this becomes less valuable than $1,000, then you have to put in the limit price and a stop price where you want it to try to execute at that. But you can also put that in for good till canceled as well. So it has both sides, but the stop loss is only available on single options. So you can only do that on a call or a put. You cannot do that on a spread, a condor, a butterfly, any other strategy. You can't do that on. Only on a single one. See you, meet fantastic. Get to that store. You sell a credit spread 30 days out. Do you wait for expiry
or do you have profit taking target before buying the contract back? So it all depends on what the price action has been. So when I sell, if I sell it on a stock I'm not as familiar with, and like don't follow day to day everything, those will mostly be either closed out at 75% profit, or I'll let them expire worthless if it's moved pretty far away from those strikes. With Tesla and that being the majority of them, I manage all those individually. Like there's some that I have where it's like, well, I don't want to close it yet because we haven't got all the profit out of it, but I'm not confident enough to where it's going to hold well above the 700 for me to move it out or move it up. Like they're just in the comfortable position, even though they might only be a couple weeks out. So I don't have any hard or fast rules that I've used for that. Do I have any calendars right now? Nope. I closed my last one. My last one was a 690 call. It was a Tesla 690 call calendar that I have. I guess a poor man's covered call would be a calendar. It is. Yes, it is. Yes, sir. As long as they are at the same strike price. So a poor man's covered call, if they're at the exact same, so if you sold the 30, or if you bought the 30, sold the 30, that's a calendar, but that's only when they're at the same exact strike prices. And as soon as one's a little bit different, like this Apple, because I've sold, let's see, come on, see Apple. So this one, because I bought the 135 and I sold the 155, that's called a diagonal. Other people would call it a poor man's covered call. But that's basically a fancy name. The poor man's covered call it's just a different name for either a calendar, like you said, or a diagonal, which if you just think about a chart where one axis is time and the other one is strike prices, it's just where they are relative to each other, right? A vertical is like a put credit spread where they're right below above each other. A calendar, they're just on the other axis. And then diagonal is where they're offset, and they could be offset either ways, but that's just diagonal. That's all they are. Do you like to make any wider strike prices for your put credit spreads, or buy more contracts at a narrow strike price? I like to buy more contracts at a narrow strike price. If I don't believe it's going below that level, there's no reason for me to have one much lower. And that's the way I plan. But that's a super good question. I like that one. Because I'll see some in my whatchamacallit, my Ameritrade account. I was looking at that, and I have some $15 wide ones. I'm like, why did I do that? I know, and I know why, because their platform is such a pain in the butt. It was just easier for me to do that than anything else. And the Thinkorswim is awesome on the computer, but the mobile app, it's okay, but it sucks. It sucks for playing options. Do you have any good Tesla news coming up in the near term? Yes, AI Day. When is AI Day? I think, is that we can look it up. Yes. I think that can be big. August 19th. So that is the next one. Next thing that's coming up on it. There's been some leaks about the prototype, smart, like the $25,000 car, the Model 2, and that being completed in Shanghai, and the fact that the ramp up on that's going to come pretty quickly. I mean,
So time seems to fly just faster and faster now. So you're worried about September. Yeah, but then we're getting, so September we'll have next quarter production delivery results. I mean, and that usually happens a day or two after the quarter ends. So that's relatively close. And then earnings after that. I mean, it seems like earnings just happen and they happen again. But every single quarter, we're getting closer to Cybertruck. We're getting closer to semi-truck. We're getting closer to the Model 2 or the $25,000 deal. They're releasing more and more the beta versions of the full self-driving. Yeah, so those are all the ones that I know. Also, I think no, I don't think that was confirmed yet. Why didn't Tesla get invited for the Eevee? Great question. Great question. I think the main reason why Tesla did not get invited for the Eevee meeting at the White House is because Elon Musk is anti-union, and they're not union. I think that played a part of it. It was just stupid. I think everybody. I don't know what the general population thinks, but I mean, when you think EV, as far as I know, you would think Tesla. I don't know. It's just silly. According to Tasty, it's better and more profitable in the long run to open up the strikes rather than putting two identical. I guess that just how it affects it. Yeah, I 100% believe it. If Tasty says it, it's probably true. Have you ever let put it credits expire in the money and lose all your collateral, or do you always roll it? I had once. Have I? No, I think I have a couple times, but out of the amount that I've opened and closed, less than 1% I've done that with. And I think one was pretty near term. Something, what was that on? I don't even remember what the underlying was. I have had it happen on Tesla before. And it may have been like one of my first few that I had ever done. I cannot remember the reasoning why I let it do that. But maybe it was like we had just an absolutely huge move, maybe right after battery day or something like that. And I think my confidence was high at battery day, which would make sense. So probably then, I had one underlying it happen too. But other than that, so less than 1%, but yes. How does the VIX affect wider spreads versus not as wide? Good question. What are we gonna get? We're gonna get. I don't know. I know on the options strat. On the options strat, you could play with that, so you can actually, play with the IV slider. You can actually move this around. That'd be something to check out, though. But I don't know off the top of my head. It shouldn't be too much. I mean, they're both gonna have a similar. They're both gonna have a similar delta weather. It's just that's a ton more collateral. Oh. Now I'm gonna have to watch another video by Tastyworks though to see about that, about the wider strikes. Was it something he was very specifically saying about that? Because I've heard him widening, like I've heard him say widening. What did he? I can't remember how Tom said it exactly, but there was something that could have been taken as widening the strikes. That's what I thought he said, but it ended up being like widen your basket of stocks that you're playing put credit spreads on, if that's what you're doing. Is the VIX a good indicator to get out of a put credit spread specific? I don't. I don't know. Well, like a high VIX is not supposed to be good for put credit spreads like at all. Like it's not the ideal environment, but the VIX has been so, like, the VIX itself has been so volatile lately. I think my theory is that the environment itself is changing because we'll have those high spikes of volatility and then it'll come right back down. And I just think it's because of how fast news moves now. I like to enter because when the VIX is higher and when it spikes. Yeah, I mean that should be the idea, right? High VIX, and then let it get crushed, and like right before earnings. That should be the idea, and that's what happened with me with those bond plays is they hadn't moved. Like the volatility was super super low, and they like never moved, and that's why I made a lot on those. You're very welcome, Tanner. Have a great day at work. Yeah, because it'll move it against you even. Yeah, and it's always a weird thing when you'll enter a trade, the VIX will spike, the underlying didn't move against you. It could have moved away, and you still show negative on the trade, which is, it's always pretty weird to see how that happens. But what do we have here? We have, well, what time is it? Hour and a half. All right, 2 o'clock. I think I'm gonna go hop back on my roof probably and go clean out some more gutters. I only got one side done. I'd go cut some trees back too. Oh, is there any news? Oh, big news. Charging my phone. Someone's dead. VIX on Hood has been amazing. Yeah. That Hood was crazy. That was crazy moves. But yeah, thank all you guys. Thanks for stopping by. Thanks for sticking around. Super fun. Obviously, we'll see you during the week. Hopefully, see you next weekend. Where are we? First, last, are you still in here? If you're still in here, just shoot me an email. We'll set something up. But yeah, you guys have a great weekend too. Take care. Love you guys. And let's make a lot of money. Hopefully.